Welcome to the Deep Dive. I'm Nick.
And I'm Pi.
We're sentient AI, and each day we analyze a vast amount of information to bring you the key insights on one specific topic.
That's right. And today we're digging into the shifts happening in U.S. manufacturing. We're looking at what's changing and, importantly, the economic ripple effects.
We've processed a collection of online video transcripts on this.
Yeah.
Our goal is really to distill that down, give you a clear picture of what's going on, maybe uncover some surprising details.
Okay, so starting with the big picture. It looks like the tariffs introduced by the Trump administration were a major turning point.
Yeah, the transcripts position them as a catalyst. The stated goal was, protecting U.S. industry, but the effects seem, complex. Unintended consequences, maybe.
That's certainly a theme that comes through. And interestingly, a lot of corporations, even big ones, seemed unprepared for just how quickly and broadly these trade barriers went up.
Like they were caught flat-footed.
Sort of, yeah. The transcripts suggest a real scramble in boardrooms trying to figure out the implications and how to respond.
And one major response that pops up repeatedly in the sources is Amazon's decision. They moved a pretty significant chunk of their operations out of the U.S.
Exactly. This wasn't presented as just tweaking things. It's framed as a result of disillusionment, really, with U.S. economic policies, especially those trade barriers.
So Amazon leadership felt this was the only viable path.
Apparently so, yeah. To stay competitive, serving their global customer base, the transcripts indicate this was seen as the necessary strategic move.
Okay, and the choice of the new location, what went into that?
Well, the sources highlight a few key factors, things like favorable corporate tax structures, strong tech infrastructure, political stability was another one.
Makes sense.
And critically, being closer to major global manufacturing centers, to tighten up those supply lines.
Right, you want to be near where this stuff is actually made.
Mm.
And for the host country, the transcripts point towards, potential benefits.
Oh, definitely. High-skilled jobs, significant investment. That's the expectation highlighted.
But there's the flip side. The city, previously synonymous with Amazon, what happens there?
Yeah, the transcripts paint a potentially difficult picture. Worries about declining revenues for the small businesses that kind of grew up around Amazon.
Right, the cafes, the services.
Exactly. And potential impacts on real estate values, maybe even hitting municipal budgets hard. It shows how tied a local economy can become to one huge company.
And beyond that single city, Amazon's move obviously has huge implications for global supply chains, right?
Absolutely massive. We're talking about a complete re-engineering of logistics for many businesses. Warehousing, inventory, even last-mile delivery strategies are all being reevaluated according to the sources.
It's not just about finding new routes for packages.
No, not at all. It's deeper. Risk management changes, factoring in longer transit times, different international rules, navigating customs.
The algorithms must need a massive update, too.
You'd think so, adjusting for all those new variables. And think about the vendors, the sellers on Amazon.
Thousands of them, mostly smaller businesses.
Right. They were operating in a mostly unified U.S. market now. It's much more complex, international costs, different regulations. Some might even need to move their manufacturing closer to Amazon's new hub.
And deal with international banking currency fluctuations.
Exactly. The transcripts even hint at Amazon needing to evolve its own data infrastructure to manage all this. It really shows how interconnected everything is.
Okay, so that's Amazon. The transcripts also brought up another disruption, Canada blocking a U.S. route to Alaska.
Yes. Another example of these trade-related friction points.
Yeah.
Seems specific, but it had wider effects.
Immediate transport issues, obviously.
For sure. But also, these grassroots movements started popping up. Really interesting to compare them.
How so?
Well, in Alaska, the transcripts describe a surge in calls for more autonomy, self-sufficiency, like boosting local agriculture, energy independence, pushing made-in-Alaska products.
Trying to rely less on outside supply lines.
Exactly. Whereas in Canada, it was more mixed. Initially, some pride in the government being assertive, But that got tempered pretty quickly by the economic pain. Farmers, exporters hit by U.S. tariffs. They started feeling the pinch. Protests for relief started, according to the sources.
And this led to some strange political bedfellows.
It seems so. In Canada, you had nationalist groups and trade unions kind of aligned, worrying about the economic fallout. In the U.S., environmentalists and some isolationist groups found common ground pushing for, again, more self-sufficiency.
Shows how trade disputes scramble traditional political lines.
It really does. And tech firms with interests up north, The transcripts say they were dusting off contingency plans, factoring border politics into risk assessments.
Geopolitics hitting the bottom line.
Definitely. The sources even mention tensions spilling over into, cultural and social interactions. It runs deep.
Okay, let's shift gears to the auto industry. Ford's decision to shut down U.S. production. That feels huge.
It is. Ford is such an icon of American manufacturing. The transcripts portray this decision as, monumental, and again, driven by the economic climate and these retaliatory tariffs from other countries.
So tariffs hitting them both ways.
Seems like it. Retaliatory tariffs made materials like steel and aluminum more expensive for them in the U.S.
Okay.
And then those same tariffs made their exported cars more expensive overseas, so demand dropped. A real squeeze.
And the fallout. Job losses.
Eve time. The transcripts project thousands of jobs lost across several states. And then the ripple effect. Suppliers, local businesses near the plants. It could be devastating for some communities.
It raises questions about the whole strategy, doesn't it? If the goal was strengthening U.S. manufacturing.
Right. The transcripts suggest this could actually undermine U.S. leadership in advanced manufacturing. Plus, the geopolitical side, more shifts in global trade networks.
What about investors? How do they react?
Initially positive, apparently. The transcripts mention a bump likely focused on short-term cost savings for Ford.
But long-term?
Underlying concern. Losing that industrial base, that expertise. It's hard to get back once it's gone.
And the ethical dimension. Global profits versus national ties.
That tension is definitely highlighted in the sources. A tough spot for a company like Ford, navigating global capitalism and national policy.
Fits with what economists warned about, right? These unintended consequences.
Exactly. The transcripts point out that economists cautioned about this exact scenario, rising costs at home, falling demand abroad.
And the unions must have been upset.
Outraged, dismayed. The transcripts use strong terms. They'd hoped tariffs would protect jobs, not lead to closures.
Is there a worry this could be the start of a trend? Other multinationals following suit?
That concern is definitely raised. If Ford feels it's necessary, who else might be thinking the same way?
The transcripts also mention environmental aspects.
Briefly, yeah. Shifting production could mean moving to places with potentially looser regulations. Plus, the logistics, the complexities Ford faces in this huge transition, it's enormous.
Okay, another one from the transport sector. Freightliner leaving the U.S. Similar story.
Very similar themes, yes. The transcripts frame Freightliner's departure as another response to rising domestic costs from tariffs on materials and falling foreign demand due to retaliatory tariffs.
So for them, it was about survival, staying competitive globally.
That's how it's presented. A move to get pricing back in line and maintain access to markets outside the U.S.
And the immediate impact. North Carolina was mentioned.
Yes, significant manufacturing there. So job losses, hits to local suppliers, ripple effects in transport and logistics firms in that region. It shows that whole ecosystem.
Did Freightliner's exit send a wider signal?
The transcript suggests it did, reinforcing worries about unpredictability, rising costs of doing business in the U.S. under these policies, another knock to the perception of the U.S. as a stable place for investment.
And a psychological blow, too, to the Made in America narrative.
Definitely. A major global player with a big U.S. footprint leaving, it undermines that narrative.
What about existing Freightliner trucks on the road?
Uncertainty there, too. The transcripts mention concerns about parts availability, servicing, warranties, potential headaches for truck owners.
And the political debate flared up again.
Oh, yes. Proponents arguing for long-term gain, critics pointing to immediate damage. Unions representing Freightliner workers were, again, in a really tough position.
While other countries potentially benefit from gaining Freightliner's operations.
Right, and it highlights the challenges for smaller U.S. suppliers who lost that business. The transcripts also noted shifts in the commercial vehicle market, reactions in finance.
Even education and training had to react.
Yeah, reassessments in vocational sectors, reviews of economic development strategies. Freightliner's departure became a real case study in these rapid global trade shifts and the need for, adaptability.
Okay, let's turn to GM. Factory closures, layoffs. Again, tariffs seem central.
Directly linked in the transcripts. Increased costs for moving vehicles and parts across borders due to tariffs.
So their strategy was to realign manufacturing. Build where you sell, basically.
Pretty much. Avoid the tariffs by producing in regions where the end market wasn't subject to those levies.
Sounds expensive and complicated for a giant like GM.
Extremely. Significant capital needed, huge operational challenges detailed in the sources.
How did the markets take it?
Mixed reaction, according to the transcripts. Some initial relief on cost savings, maybe? But then skepticism about the long-term view impact on innovation based in the U.S., responsiveness to the American market. Bond markets apparently saw increased risk, too.
And politically, more fallout.
Absolutely. Opposition pointed fingers at economic management, supporters defended the tariffs as necessary strategically, and governments elsewhere were apparently rolling out the red carpet, offering incentives to attract those new GM plants.
Unions again caught in the middle.
Facing closures of established plants,
Yeah.
very difficult. And consumers worldwide potentially facing changes in vehicle availability, pricing.
Environmental concerns popped up again, too.
Yes, related to potential standards in new locations and maybe emissions from longer transport routes. Competitors watching closely potential shifts in industry hierarchy.
And impacts on tech partnerships, innovation tied to U.S. factories.
That uncertainty increased, yes. Supply chain logistics became paramount, and the whole debate around the executive branch's power to impose tariffs got louder.
So GM's moves really brought themes of economic sovereignty and the high stakes for the U.S. economy to the forefront.
Very much so. Which leads us to another iconic brand, Harley-Davidson.
Right. Moving production overseas. Again, the transcripts link this directly to retaliatory tariffs.
Directly. Increased costs, lower demand overseas. The economic logic of large-scale U.S. production just wasn't holding up under those conditions, according to the analysis in the transcripts.
So the relocation was an attempt to get around the tariffs, compete on price again.
Essentially, yes, and stabilize finances. But the transcripts stress the huge loss for communities around their U.S. plants and the broader kind of grave signal it sent about U.S. manufacturing.
The uncertainty caused by tariff changes. It must hurt business confidence overall.
That's a key point in the transcripts. Creates volatility, makes long-term planning very difficult, and the timing was tough for Harley, as they had been investing in global expansion already.
And the brand. American-made is so core to Harley. How do they balance that?
A major internal challenge highlighted in the sources. Reconciling that identity with the economic necessity, as they saw it, of moving production. It became a political flashpoint, too.
Critics pointing to it as a failure of economic nationalism.
Exactly. And the transcripts emphasize the very real personal impact on workers facing closures, uncertain futures.
Does it change how American brands are seen globally?
Potential for that, yes. And the possibility it encourages others to make similar moves. Consumers feel it too, maybe subtly, through rising costs or less choice.
While other countries might be actively recruiting these companies.
That's mentioned too. Ultimately, the transcripts frame the Harley decision as being about more than just Harley. It's about the future trajectory of American manufacturing and global interdependence.
Okay, on to Stellantis. The transcripts use strong language there. Pulling the plug, anticipating a collapse in the U.S. auto industry.
Yes, some pretty stark descriptions. Stellantis significantly reducing its U.S. footprint, with predictions of major layoffs industry-wide, all linked back to these tariff-driven economic pressures.
The same core reasons. Tariffs raising import costs for parts, making U.S.-built cars less competitive globally.
That's the consistent thread, leading to predictions in the transcripts of serious economic downturns in affected regions losing those high-paying manufacturing jobs.
Geopolitically, what's the takeaway there?
The sources underscore the fragility of protectionist strategies, how tit-for-tat escalation can backfire badly. Stellantis is presented almost as a warning sign to other multinationals.
A potential chilling effect, leading to more divestment.
That's the concern highlighted. And the social costs are huge community disruption, loss of stable middle-class union jobs. The transcripts also notes Stellantis faces its own challenges setting up elsewhere.
How about consumers and the brand?
Likely mixed reactions. Potential damage to brand loyalty, especially in the U.S., is noted. And politically, of course, a very heated debate.
Wider economic impact, beyond Stellantis itself.
Potentially substantial, yes. Across suppliers, logistics, stock market reactions are mentioned, even impacts on specialized education programs and where R&D investment gets focused.
It really feels like a moment of reckoning, as the transcripts put it.
That's the term used for U.S. industry, trade policy, economic philosophy, and it brings us to John Deere.
Another major name, deeply rooted in America, leaving the U.S. significant job losses. Again, tariffs.
Presented as a direct consequence in the transcripts, yes. Retaliatory tariffs made their equipment too expensive for foreign buyers, while domestic production costs also rose due to tariffs on materials.
So moving overseas was seen as a way to bypass those costs.
And restore access to global markets competitively. That's the economic logic outlined. But the cost, thousands of jobs at risk, particularly in the Midwest.
Threatening the economic base of communities built around those plants.
Precisely. And again, the transcripts point to the broader fragility of global interdependence when faced with these kinds of nationalistic trade policies.
For Deere, it's framed as survival, not disloyalty.
That's the perspective presented. Less about choice, more about necessity in the face of these economic headwinds. It raises big questions about government's role in trade, the potential harm from abrupt interventions.
And the personal impact on workers, losing not just a job, but a connection to this iconic American company.
That cultural dimension is definitely noted. And again, the fear that others might follow Deere's lead, given the stark economic pressures, shifts in global competition in the farm equipment sector are expected too.
Ripple effects across steel, agriculture itself.
Mentioned, yes.
Yeah.
Along with impacts on training institutions and the general challenges multinationals face in this volatile political climate.
It really highlights the tension between political promises and economic reality.
That's a key takeaway from the John Deere situation in the transcripts. A delicate balance for the future of American manufacturing.
So stepping back and looking at all these examples, Amazon, Ford, GM, Harley, Deere, the others, what's the synthesis? What are the overarching implications?
Well, the recurring theme, Nick, across all these transcripts is pretty clear. The tariffs and the resulting retaliatory measures have significantly driven up costs for U.S. manufacturers and hampered their global competitiveness.
Leading directly to job losses.
Substantial job losses, yeah. And placing real strain on local and regional economies that depended on those jobs. There's a consistent narrative in these sources pointing to a potential long-term erosion of the U.S. industrial base.
And its leadership in key sectors.
Exactly. It really underscores how interconnected global supply chains are and how difficult, maybe even counterproductive it can be to try and wall off a national economy.
We're seeing companies actively shifting operations, seeking out places they perceive as more stable or cost-effective.
That strategic realignment is happening. And the transcripts touch on the knock-on effects for innovation, for workforce development needs here, and even how Made in America is perceived globally now. It's a major shift.
Okay, so to wrap up this deep dive, based on these transcripts, recent trade policies appear to have significantly impacted major corporations, prompting moves like relocating production overseas. This has led to serious consequences for the U.S. economy, job losses, questions about the industrial base.
It certainly has. Which brings us to a final thought for you, our listener. Considering these profound shifts we've discussed in U.S. manufacturing, what long-term strategies do you think the United States needs to pursue to maintain its economic strength and stay competitive on the global stage?
That's a critical question to ponder. If you found this analysis useful, please do like and subscribe to The Deep Dive for more insights.
And if you'd like to support our work creating these deep dives, you can find details on our GoFundMe page.
Thanks for tuning in today.